Let's get across what is moving in the markets with US jobs data, but there's more data to come this week as well, which will be critical. To talk us through it, Peter McGuire joining us from XM. Pete, a very good Monday morning to you. Thanks for joining us. All right, so there was that focus on that hotter than expected jobs number out of the States. And interesting to see how markets took that. Obviously signs of further strength in the US economy. And this week, we're going to have some key inflation data to look at as well.
Absolutely, Andrew. Good morning. Yeah, 303,000. It was shot to the upside. Obviously, the equity markets absolutely loved it, and it put I suppose, a very good confidence base for the day's trade underneath from a perspective as far as bounce to the upside. It was very, very strong when you're thinking where the S&P was and the Nasdaq up 1.25%. And we've got that, as you mentioned, the data coming out this week. Look, we'll be interested to see where it rolls. CPI rate seen at 3.4% in March, and we had 3.2% naturally the month previous. So we're expecting possibly a little bit hotter, and the energy prices are weighing in on that, which is causing much concern from an inflation standpoint.
Yeah, so taking a look at the US dollar there, obviously to this chart, Pete, with, as I mentioned there, so the market's now dialing back the prospect of rate cuts in the States. It was at 3, and that's where those dot plots showed us from the Fed, of course, their last meeting.
Exactly.
Now, perhaps expecting only two rate cuts.
Well, that's right, Andrew, and it's less than a 60% probability after those numbers coming out on Friday evening, the non-farm payrolls, and it was a 70% or plus 70% probability going back to Thursday. So it's really taken a hit. Where it rolls from here, we're just in the hands of naturally inflation and job numbers, and seeing how that all materialises come June. And I think we're, being 2.5 months out or 2 and a bit months out from a decision, it's hard to forecast. I think we've just got to wait through it and just see what those other numbers present themselves over this next 2-month period. And as I mentioned, energy prices, they want them $10 less than what they are at the moment, and be interesting to see whether that materialises.
How are you viewing what we're seeing on the US equity market at the moment? Of course, this comes ahead of earnings season too.
Well, exactly, Andrew. I mean, when you're looking at the numbers there, it's a little bit choppy, but overall the performance has been outstanding for this calendar year. And, the first 3 months, you've seen a bit of a tail off, the latter stages as that chart's showing, but they're still well and truly up from what we saw, start of January. And where they roll over that earnings season, well, we've just got to, again, wait for the numbers to drop. Overall consensus is I think it'll be relatively okay. And I don't think you're going to shoot the lights out, but, they'll track probably sideways or up from here, unless you see something dramatic happen from a geopolitical standpoint or, other red flags enter the market. So
perhaps unusually, we're seeing the equity market rise along with those bond yields.
Yeah, sure are. And this is I think, probably the concern to many traders. Is it better to put money in the bank or, just keep your funds in the market? It's, the fear of missing out versus, a flat 5% or plus. So how that, again, I think that's the flexibility of trading that allows, easy to get out of a market and easy to get into another market very, very simply. So we've just got to see how it performs. And again, surprises if they represent or they present themselves both domestically in the States and internationally.
How should we look at those valuations then? Because certainly by many metrics, they're looking stretched, as you can see here.
Yeah, very stretched. And again, look, PE ratios and all of those, Andrew, depends on when you bought into the stock. If you bought, 2.5 years ago for the Nasdaq, say that I think you'd be sitting back laughing, but if you're buying at present levels, then that's a different proposition. So again, you've got to take on board all of those key metrics and appreciate all the moving parts that present themselves as far as forward earnings, what the marketplace is like, whether their product is or their service is still very attractive to consumers, or they're bucking the system a little bit and saying, well, hang on a second, we're not hitting those sales targets. that's what you wait for the numbers to drop, and that's what analysts are across, all of those components to derive value.
So, Pete, the markets will be looking at that data this week, as well as some central bank action too. Beginning with, well, let's first take a look at the ECB expectations there, particularly where inflation is tracking in the Eurozone.
Well, Eurozone, Andrew, it's ticked down. We're running at about 2.4% in March and tipping a rate cut in June. That's what the consensus is. So inflation's a fair bit cooler than what you're seeing in the States. In the Eurozone, you understand the position where we are with Germany and some of those economic powerhouses across Europe. It's very, very soft, growth. So that's going to be, I think, maybe the first cab off the rank, or maybe, I think there are a couple of others that might move before it, but certainly they're going to be in front of the States, I would say. So we've just got to see what impact that's going to have naturally to the euro versus yen, euro versus pound, and of course against the dollar.
Now the Bank of Canada are also making a decision.
Yeah, you've got a 15% probability, Andrew, this Wednesday you might see a rate cut by the Canadians. So, they've just, it's a work in progress, see whether it materialises. They could be first cab off the rank. And we've just got to see, again, what impact that'll have to energy prices from Canadian tar sands all the way through to, the internal machinations or workings of the Canadian economy. It's fairly stretched, high real estate prices, and it's been a pretty dynamic currency and, of course, economy over the last 12 to 18 months.
And more locally, midweek, we'll get a revelation from the Bank of New Zealand.
Yeah, across the ditch, we're not expecting anything, Andrew, as far as rate policy, in the sense of cutting. Inflation still remains fairly elevated, and that's a concern to the RBNZ. So we've just got to work through that and see whether when you're looking at higher energy prices, this could be a real stumbling block for the RBNZ. They may, be pushed out to many months ahead until they see any form of rate cut. See if the same thing works here.
Now, Pete, we're seeing commodity prices, a lot of price action there at the moment, led by gold, which is taking record after record. What are you seeing here?
Well, Andrew, got central bank buying of a huge investor interest as far as retail land across the globe. You've got geopolitics playing into it. You've got the uncertainty with inflation. And all of those components really marry up to a perfect storm. You're at the best part of 23.40 an ounce. Silver also had a huge run up. So I think that, by the looks of it, the momentum's going to stay until you see something, it gets exhausted to the upside. So at the moment, it's a raging bull market. And, maybe 2,400's achievable sometime this month. I wouldn't be surprised to take it out.
Yeah, it's quite a bit of central bank buying at the same time.
Yeah, absolutely. The Chinese, you name it, it just seems to be a very, very solid. And India, as the chart shows, they've been a huge, huge buyer. But China really is the leader of the pack. And its overall global demand is driving the price higher. And it's just quite extraordinary what we've seen in the last couple of years. I mean, that chart really shows the price of it, and it's just, very dynamic from those points back to 18 and 19.